All right, welcome back, traders. John Caruso coming to you here for the afternoon of November 14th. We're going to run through a few quick charts for you guys here today. Kind of follow up on our S&P 500 analysis that we've been doing over the past several weeks. But first, as always, we always kick it off with the immediate term market risks. Of course, the NFIB Small Business Optimism Index declined this morning 0.1% to 90.7. That is down from 90.8 in the September reading. 22% of owners reported that inflation was their single most important problem in operating their business. That is down 1 point from September. Also, a net negative 17% of all owners reported higher nominal sales in the past 3 months. That's down 9 points from the September reading and the lowest reading since July of 2020. Also, news state and federal tax receipts declined for the seventh consecutive month. That is inconsistent with, or historically inconsistent with what we're told as being a strong economy. Over the past 40 years, you could link up the decline in tax receipts with a slowing and worsening economy. It's not always 100% an accurate indicator of an economy that is moving towards recession, but the relationship is very close. We also did see a poll here recently suggesting that 30 out of 32 strategists suggest that the 10-year yield has peaked in this current cycle. And of course, this morning we did see the consumer price index that came in better than expected, 4% on the headline year-over-year reading. Market was expecting 4.1. We also did see a previous reading in September of 4.1, so that came in a tenth, and we did see the month-over-month number come in line with expectations of up 0.1%. And let's jump over to the chart here. We got a massive rally going on in the S&P 500. We are up close to 2% or 80 points, 80 handles on the day. We are at the top of my range right now, getting a little bit overextended, but I am not getting the overbought signal that I typically look for, coupled with the top of the range that gives me a hardened conviction to start fading this move. So not quite there yet. Might have another push following PPI tomorrow, where that might be a little more better opportunity to start looking at resetting some short side trades. We're going to say short side trades because this market right now, it's up 10% since October 27th. So let's rewind the tape a little bit here. Of course, we saw the massive melt up in July. Market peaked in August. We did see that bounce to a lower high in September, and then we saw the market just proceed to trade down. That was in line with our expectations from about August through October. As you can see how we have it drawn in here, we were expecting a bottom to be made at some point in the first week of November. The bottom did come a little bit early down in here. And of course, as we have it drawn in here, we expected a little bit more of a choppy, controlled, slow, steady grind higher into the end of the year, all the way up to these targets up here, which we are pretty much at right now at about 45 and a quarter. So we've put on a lot of weight in this market in a very short period of time. We're up 10% in the last 10 trading sessions. So I do expect that we are going to see some give back in here over the course of the next few weeks. But ultimately, I do expect this market to kind of hold itself together through the end of the year. And then, of course, out into early 2024, we have the risks set to pick back up dramatically in this market as we turn the page on 2023, move into 2024. So right now, I do believe the market's a little bit extended up in here, not quite getting the overbought signal, but we do have it at the top of the range right now. Maybe a little more bleed back into 45.20 to 45.30. Maybe look at resetting or booking some gains. If you're long this market, congratulations, book some gains. I'd certainly be taking some of those off the table going throughout the course of the week. We do have a big question mark that kind of looms with Congress over the course of the weekend. So if you've caught the bulk of this move, congratulations. I'd be looking at locking in some profits at current levels. So that's a look at the S&P 500. We're going to jump over to the gold market. Gold also the beneficiary of the CPI number here this morning. Let me go to the daily. Daily chart right now, as you can see, we are up just about 1% here on the day. Not getting as strong as a reaction as I would have thought we would have gotten based on the breakdown that we've seen in the U.S. dollar here today. However, gold is trading higher. I do have it at neutral momentum right now. We are sniffing some immediate-term overbought signal up in here. I do have the range tightening. Low end of the range about 1946. Top of the range is coming in about 2017. So we're going to wait and watch. And I am constructive on gold. I am bullish on gold. The one thing that bothers me a little bit here is the weekly pattern. This move up here, this kind of rounded top that we saw. So maybe we get a little more chop sideways and we start chopping our way higher. I do ultimately believe gold prices will make a new all-time high at some point, if not between now and the end of the year. At some point out into early 2024, we do think gold will make another new all-time high. So that's a look at gold. Still constructive on gold, still bullish on gold, so long as we hold above the 1900 level. So that's a look at December gold. Taking a look at crude oil right now. I'm not doing a lot with crude. Haven't done much since it broke through my trend. My trend was 83, broke through 83, and it has proceeded to fall as deep as about just inside of 75. We have put together about a 4 or 5 day rally here. Markets pushed back basically towards the 200-day moving average. Still bearish trend, negative momentum. Was getting an immediate term overbought signal. That was a great signal here this morning to fade this early morning move. But all in all, I'm not doing much with crude. I'm waiting and watching. If it gets back above 83, I would consider purchasing crude for another chance to get across the range here. But as long as we're below 83, we're bearish trend and always have the potential to navigate back down towards 70. We'll say 70 to about 68 on the downside. So still not doing a lot with crude. That's all I have for everyone here today. If you have any questions, if you want to review some other markets, feel free to ping me at jcaruso at rjofutures.com. Or if you want to jump on our morning market insight letter, it is free of charge. Feel free to ping me, and we can certainly add you to that list. Best of luck to everybody out there. Have a great day.